Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from TikToker. Let's jump right into the gold market here. We have a weakness in the metals here due to the expiration of the options. And I want to point out to you that this is a classic example of what it is called spoofing the market or scaring the market. It's becoming almost pretty obvious that whenever there is an option expiration, what we see is a tremendous sell-off in the futures markets that essentially overshadow the fundamentals, the real market condition that we're dealing with right now. And it really kills the premium of those calls that are expiring here, and certainly the in the silver market, which is a much thinner market here. If you take a look at the volume, just the volume of contracts that were sold today are above the norm, so to speak. There's no reason, absolutely no reason fundamentally, after Chairman Powell's speech to sell the market, to drop the market 50, 70 cents, except for the fact that the other side of the trade, which are the commercials, the central bankers that want to maintain the cap, so to speak, on precious metals, they pretty much apply a tremendous amount of paper supply to the market that creates this waterfall correction where it runs through stops from buyers pretty much that bought the market last early this week or last week. And if you didn't have a trailing stop, which is what we recommend for you guys when you catch a trend, follow it with a trailing stop first. Do not use straight stops. But when your position enters into a profitable level, then you want to use trailing stops. So what we have here today is a correction that I believe was precipitated by an oversupply of futures shorts, paper shorts, that essentially skew the actual price of delivery. Now, as a trader, understanding that function now, that is pretty obvious, and it's been pretty obvious since the leaders, pretty much eliminated the uptick rule. Just think about this. It eliminated the uptick rule that allowed from 2012 algorithms to continuously hit the market without an uptick rule. And they could run through those stops. They can clean those stops. They can create this kind of a waterfall correction that essentially wipes out all the gains that were made previously. Now, if you were part of our team here and you were a member of the private trading room here that we have, you would have received this information ahead of time in order for you to be able to lock in your profits when the market hit 26.49. We advised our traders ahead of time, and also we publish this information in my private trading room. And I make a point of updating my traders literally 23 hours a day. The platform is open 23 hours a day. And here, whenever we complete a pattern, a trade, we advise. And at 7:20 p.m. last night, gold completed the 1789 target, and we pretty much identify the silver as well, and targets completed when they are, and advise of the next targets, and recommend when to book profits. So at 7:29 last night, we recommended our traders basically to book profits. So besides allowing our traders to have access to the data for yourself on the website, in the trading room here, I have this trading room where I'm sharing this information with you as a courtesy for those self-directed individuals that are looking for an alternative, that are looking for some kind of a trading tool that will take them out of the common denominator. And although I say this clearly, that this is not a guarantee trading program, but it acts like a GPS for your trading, depending upon your profile for risk and money management, that it can guide you through these turbulent times, through these volatile times. For example, right now, this was avoided by our traders in the futures contract that are looking for day trades. They got out at here at 26.49, which was the extreme level above the mean. And now the price has come down to the extreme below the mean. And what we do is we mean reversion trading means basically trading the extremes above the mean and the extremes below the mean. So now where we are, it's activated a buy signal in silver from 25.85, which is the 360-day cycle. So you want to get long on the silver based on the signal here, which is a 360-day cycle. We're beginning to identify the completion of these corrections by the AI, beginning to identify the trigger points after the market tests the levels of support, the levels in blue, which essentially tell you that when the market comes down to this level, regardless of what brought the market down, that you want to look for a reversion to unfold. And that's what we're looking at here. Now, the market trades above 25.98. It's going to engage and integrate the daily signals above 25.98, confirming the buy one 360-day cycle signal at the buy one level of 25.85, and the targets automatically of 26.18, 26.15 become active once again. I believe, and this is my opinion, this is how I'm looking at this myself personally, how I'm using this GPS for my own trading. Gold weekly buy trigger on a close above 1761. We activated already a buy two daily signal at 1755. Right here, by the market coming down, activating this, making a low of 1754.60, and the code is saying to buy at 1755. Now, when we talk about the relative implied volatility down here, we're looking at about a 50-90% relative implied volatility to the mean, of which is about a 50-50 standard deviation, and the mean is 1775 daily. So what this is saying is that the market has reached an extreme level above the mean of 1775, completed the pattern and is activating a reversion back up to the mean. This is what it's called mean reversion trading, where we identify the extreme levels below or above the mean and look for the AI to tell us when the signal is triggered. Automatically, when the signal is triggered, your protective level is identified, which is the entry point, the entry pivot point below, if it's a buy signal, or the entry point above, if it's a short trigger. This signal came in as a short at 1788, roughly, on the 20. It was yesterday, actually, at 7:15 p.m. We recommended our traders to lock in the profits here. Some of them were long, and just take profits. And if you want to go short, obviously you activated a short trigger here. So what I teach you is when you can take the control to make decisions intelligently, without emotion, using mathematics, using Fibonacci, Gann, and principles of Elliott wave, along with vortex mathematics, gives us this incredible trading tool that is simplistic, very transparent, and extremely accurate. So we have established a buy signal from the daily B2. We're about to activate a weekly buy trigger on a close above 1761. So there's no guessing. I don't care what the fundamentals look like, what Mr. Biden is saying, or anything else, because nothing's changed fundamentally. What we see is just a tremendous amount of political rhetoric repeating the same thing over and over and over again. Now, one of the things I want to point out to you that I believe is beginning to affect the market here is the fact that we've seen interest rates per cop again. We're back up to 168. And I pointed out yesterday that this looked to be a bit of a reversal around the 156, 157 on my video. And of course, now we're looking at 168. So I believe this is the reason why the price of metals are coming down more than anything else. And what this is indicating is obviously what Chairman Powell commented was that the economy is growing faster than anticipated. Now, I'm being asked all the time about interest rates rising being bearish for the gold market. And I believe that when you take a look at where we are, the landscape of where we are, on a short-term basis, I would say that usually is the relationship. Higher interest rates bearish for gold, for precious metals. Under normal market conditions, that's pretty much the relationship that unfolds. We're not dealing with normal conditions. We're not dealing with anything normal at all. If anything, I think that what we are witnessing is history making itself. There is no point of reference to what's happening here. There is no point of reference in terms of the policies that have to be implemented in order to pull us out of this black hole that we seem to be, challenging to get out of, so to speak. What we're seeing here is obviously different sectors of the economy. On one hand, we're seeing obviously the explosion in real estate prices, retail home sales are at historic levels. Interest rates are historic levels, and of course the um, movement, I believe, in the real estate market that we have is anticipating what I believe is inevitably going to happen, that our currency, the US dollar reserve currency, is being devalued slowly. Every time they print an extra dollar, fiat currency, the purchasing power of the US dollar declines. The intrinsic value declines. And what that means is that we are importing now inflation in the United States. We've been very lucky since pretty much the 70s, when Nixon lifted the gold standard of the US dollar, that we've been pretty much exporting inflation to the world. And I think when you take a look at the budget deficit, the debt levels that we are in, if we just talk for the United States, we are in excess of 100, I believe now 120% of GDP. And there is no way in the world that our governments are going to allow for interest rates to go up in the long end of the market under this mountain of debt, that I think we're looking at close to $30 trillion. So that's the reality. And I think the 10-year note is beginning to anticipate those inflationary pressures. Now, the dilemma that we have, that I'm dealing with right now, that I believe is going to be a surprise to the market, is how fast is this velocity of money going to come into the system? How anxious are people with tremendous liquidity? The money supply, is like a hockey stick, M1, M2, and the Feds have even stopped printing that data on a weekly basis, and I believe are only going to do it once a month. So why bother? Commodity prices are exploding. Energy prices are exploding. Why bother to report that data? It's temporary, is what they say, and they don't include that in the formula pretty much that makes up the CPI. So we have a skewed process in transparency, I believe, in telling us exactly where we are, which is, I believe, a misrepresentation. And I think that, you should be aware of it. And in order for you to prepare, our government doesn't tell us, how we need to protect ourselves. That's our responsibility. They only can do, say, here's, some stimulus for you to do what you need to do. And that's the problem. That's really the problem, that there is too much money in the system. And as we move back into the economy here, the fear is that velocity is going to surpass the availability of those supplies. And if that is the case, then the prices are going to reflect that by skyrocketing. We are really, I'm already hearing, shortages in plastics, computer chips, basic goods. And I think we're coming to a point where we're going to have a problem with food, and we may go into a shortage of food situation here. This is where I believe some of the potential black swans unfolding as we move into the rest of the year. particularly, as we begin to open up the economy. Now, on the other side of this picture here in the United States, we're looking at India at historic spikes, massive infections, and the country is in tremendous health. It's obviously overpopulated, and that's, I believe, obviously part of the problem with this, not having the equipment and, the facilities relative to the population is going to become a problem. And so my prayers goes out to those people in India. I sincerely mean that. Coming back to the market here, how I am going to monetize out of this situation, which is what I do. I'm a trader, a self-directed trader. I'm a coach teacher, and this is what I'm sharing with you here is the way that pretty much I am looking at the VCPMI as a GPS for my trading, and how do I guide my trading? So coming back to the market here, long at 1761, long at 1755, we catching in the weekly signal, and our next target when the signals are activated, whether it's the weekly or daily, are the levels above. Immediately, the next levels above. And in this case, the 1768 is the near-term target. Then we're looking at the daily mean of 1775, which was activated from that 1755 by 2 level here this morning. So the weekly target activated 1761 is 1780. The daily target from 1755. The first target, 61, was completed. The next one is 68. Then the average price of 1775. We can see the silver reverting as well. These corrections, this kind of spoofing that is done in the market, sometimes, artificially, obviously, creates some real incredible trading opportunities. And the VCPMI identifies for us when those opportunities are created and triggered. Very specific intelligence. Continue to hold your long position here. And again, this is like a GPS for you self-directed traders, because this tells you the direction of the market with tremendous accuracy, and it depends upon you as a self-directed individual, how you manage the intelligence, how you drive with this intelligence. In terms of how do you trade it? What do you trade? What instruments do you trade? How do you manage the risk in those instruments? And why do you trade those instruments? These are all the questions I ask myself. So when I'm down here and I'm looking at a signal that's being activated from the buy 2 daily, and I'm looking at a 95% probability mathematically that the market, potentially is going to revert if activated. That's a pretty good signal. Below, you're looking at the monthly support of 1754. And below that, you're looking at the buy two level of 1745. So here, the GPI is telling you that it is a high probability area for you to go long. The question is, how do you go long? The futures contract is only one instrument. Depending upon your profile for risk and money management, obviously, then you can decide whether you want to do futures, stocks, options, ETFs, or a combination of all of them. And that depends upon your skill as a trader or as a driver in using the VCPMI as a GPS for your trading. We have slowed down on the selling pressure that I believe pretty much is indicating that this is a capitulation of that pressure. Great. GBTC, a little bit of profit taking. Coin, a little bit of profit taking as well. These are virtual instruments that we are trading and we are holding, and we are recommending to measure, again, the volatility according to your profile. But we are very interested in trading these instruments as they are extremely volatile, and they give us the ingredients for us to be able to apply the algorithm with. Continue to hold your long position in gold here. Market is building a base, consolidating around the 50% Fibonacci retracement from the low that we made in March of 2020 to the high in August of 2089. So we are building what I believe is a higher high in this process that we are building from the low that we made back in March 8th of pretty much coming down to 1673, which is the 61.8% Fibonacci retracement. We came down twice, and we generated the uptrend that we're looking at within a short-term correction that you see here, which is really creating a little bit of a bearish flag. You see here, very similar pattern to the previous pattern here. You see this little flag here, okay? I believe the market is setting up to break out of this flag, just like here, and we're going to be looking at a challenge, the highs that we saw of 1798 here on the 22nd, and I believe that the market from up here has very little resistance to get us up to 1820 in that vicinity, and that's my target that I'm looking for pretty much over the short term. So I'm going to stick to that 1810 target, and I want to see what the market does when it goes up there. So that's my target, short term to intermediate. And in the meantime, I want to buy into these corrections, particularly as they come into the buy 2 level. Buy 1 level. There is a lot of buzz going around about the earnings that are coming out, showing tremendous growth on some of these major companies. So, the momentum again of coming back to a recovery, coming back to the economy is prevalent in the market right now. And, coming back to what I said earlier here, that I think that what we're going to see is a velocity of money unlike we have never seen before. And that essentially, kind of puts into question, how fast inflation is going to run in, and whether it's going to, run into hyperinflation. If we get a squeeze of any kind of supply that is in short supply as we come into the economy here, it's going to begin to create the talk of hyperinflation. I think what we're looking in real estate is hyperinflation, where people basically are willing to pay up to $100,000 above the asking price and waiving all restrictions, all obligations, all inspections. It is absolutely insane. That is hyperinflation in real estate. And the question is, obviously, how far is it going to go? Is it sustainable? I think the average price now in the United States is roughly $700,000, particularly California. So that's what you call asset inflation. And when people chase fewer goods that are available, it causes this anomaly in price. And of course, it's a combination of lower interest rates historically, with a lack of supply in housing and record demand is what's making this market do what it's doing right now. But I think all of that is building an explosive, it's like a pressure cooker in the price of silver, in price of gold. They are the most oversold in negative territory, particularly in comparison to the commodities markets here. So I think it's just a matter of time. And for myself, I'm glad that we haven't taken off yet, in a way, because I want to continue to buy this stuff. It's given me a chance to accumulate, a way for me to be able, again, to monetize out of this potential crisis that is now unfolding, which is a black swan that we call inflation. It's going to get louder. It's going to get bigger. And, we're going to have to deal with it, because that's what the system is being conducive to do, by applying this incredible amount of stimulus, free money in the system. Liquidity is what they call. I think in my opinion, the problem is not the liquidity in the market. The problem is how they distribute that liquidity, how they mismanage that liquidity. And it seems that it's out of control. I hear in the background another, $2 to $4 trillion being discussed, different packages. So we have another potentially $2 trillion coming around the corner being discussed. By the time all is said and done, we're going to be looking at 15% of GDP to use for this pandemic, which is just staggering. And of course, the government cannot allow for interest rates to go up. They may allow the 10-year note to go in whatever it's going to do, and to a certain degree, that inflation factor is going to take some of the edge off the potential, the implosion that they are afraid, to happen in these markets, particularly in the bond markets, as we put pressure on interest rates to rise. And so they're watching this very carefully, because they're not going to allow the interest rate on the 30-year bond to be increased. It's impossible, because if they do, you're looking at an implosion of the bond market, corporate bonds, junk bonds. You're just looking at a collapse in the U.S. economy. And of course, if that were to be the case, then you're looking potentially at downgrading U.S. bonds, which would be just completely detrimental to the integrity of the U.S. dollar as the world's reserve currency. So what we're talking about here is currency. And what we're talking about is whether fiat currency is going to be continued to use, or real money, which is gold and silver, or this virtual world economy that we've created, where now we have created virtual currencies. And the question is, how long is it going to take for our government to introduce our own virtual currency, or I should say their own virtual currency? And what is going to be the rules and regulations, which is really what I think people are afraid in terms of trading Bitcoin in the open market. These are exciting times. We are in the middle of a transformation, a change in paradigm, and that creates huge opportunities. $63.90 on the gold, as you can see, as I've been talking here, the momentum of the market is validating the signal, the artificial intelligence of the VCPMI. The next target is 1768. And so you can use this as a GPS, again, according to your profile, according to how you create your goals and objectives in your portfolio. Let's continue to watch the market here. If you bought the signal from 55, at 61, you could take some profits if you are using multiples. And you could have re-entered here when the signal gave a buy signal again at 761.30. And that's the signal that we are in right now. If you are following the signal, now you can trail your stop. Trail your stop. Trail your stop to your entry point or to the level below of 1761. On a close below, conservative traders can get out. Or, as I tell my subscribers, my traders here, and I've been sharing this with you, use 3 of the stops that we recommend. Conservative one is a close below. The aggressive one is you wait till the close, and obviously carrying the maximum dollar catastrophe stop, which is the amount of money that you are willing to risk according to your profile. $65.20, very nicely moving to the upside. The target for this pattern is 68. So you can, again, unload some of the profits that you made from below. And this is what I mean by you can use this as a GPS for your trading. I'm going to cash in here. This was I forgot to cash in a short trade that I had, but when I'm teaching and coaching, sometimes I forget. But we still made $870. We were short. So now we have reverted right back up again, and we're on the long side. $17.68 is your target. $25.98 activates a excuse me a daily buy signal from buy one. We are on the buy trigger from the 25.85, the buy one level of the 360-day cycle. It went long at 25.8750. It just completed the target of 98, and now a close above 98 again is going to activate the daily buy trigger. So gold and silver are on a buy mode. With the it looks like the silver, pretty much, I think they both now have aligned themselves in terms of leadership. So we're going to see from here, who leads the way up, whether it's going to be silver or gold adjusting to this correction that we just saw, which I believe was a spoofing correction. I believe it was artificial. It had nothing to do with the reality of the fundamentals. It was all simply controlling the price as the options expiration occurs. The buying power down here is absorbing all of this supply that came into the market. And that's for gold and silver that you see here. So what you see down here was when it came down, the algorithm told you that this is the area where you can potentially expect to see buying show up, buying come into the market. It is the highest probability area for a reversion to unfold. Again, from B2, it's a 95% probability. From B1, it's a 90% probability that if activated, the price will revert back to the mean. It came down, activated the buy trigger from B2, and reverted right back up, validating that probability factor. I just want to make clear that when I say the probability factor, I don't mean to say that it's a guarantee. Nothing is a guarantee. But it's a mathematical probability that tells you that, oops, the price completed the pattern using mean reversion trading principles. This is where we could see a reversal occurring. We do. That's the trigger point. That's when you go long. That's the AI, or the AI pretty much that was written in C++, telling the robot, hey, we activated a buy trigger. So I hope that I conveyed, you got to be long here, guys. You got to be owning gold down here, gold and silver, particularly on this correction, which I believe was artificially created, and it it just gave us a fantastic buying opportunity to continue to add to our core position. And I want to say this to you, that if we do get into the plus side after coming down, spoofing, scaring, taking out all these stops, and we go into the plus, I think that we can expect a pretty strong rally coming up over the next couple of weeks. $67 traded, $67.10. 1768 is the next target. $68 completed, $68 target completed. So now you can pretty much, again, take additional profits and wait and see what it does up here. If it runs through, we are carrying, a long-term core position, so we're not going to miss anything. But in the meantime, we made $1,200 easily on this trade, and we are net long on our core position. Now, once it completes the target here, then it will consolidate for a little bit. You'll go neutral and you wait until the close of the next 15-minute time frame, and then you see where the market closes. If it closes below 1768, you do nothing. You do not go short between buy one or buy two or in the blue area. You wait for the price to activate a buy trigger with the highest probabilities on your side, which is the buying or accumulating here. So here we wait. You want to be conservative. Wait till the close above 1768 at the close of this bar. And that would activate another buy trigger from the daily 1768 with a target of 1775. The weekly target is 1780. That is very active. This is what happens here when the market pretty much accomplishes the targets, is that it will go neutral. That's what it's supposed to do. It goes neutral to allow for the energy of the market or the supply and demand exchange to unfold at these levels. And so if we continue to see buyers take the supply that's being offered here, then the price is going to continue to reflect that by going higher. And that's how you use this as a GPS, that you always start from neutral and you end up in neutral to identify the energy pattern. When you enter the energy pattern, like here, okay, this is crossing the trigger point. It's activating a buy, so you can buy again and go long again. And use the same principles of the stop. The most conservative one is a close below. Automatically, you have two other choices: a hard dollar stop or the close at the end of the day, depending upon how you want to manage the risk. Your target daily is 1775. The next target, the weekly target, is 1780. Thank you again for the opportunity here to share this incredible information with you in real time, live streaming here in TikToker for the benefit of your account. Please take care of yourself. Thank you for allowing me to share this. And until next time, my friends, be well. You take care, and I'll see you soon. Bye.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.